Welcome to the Possible Promise podcast, where we break down the complexities of finance and point the way to financial success. Today is October 10th, 2020, and this is episode 17, Risk Management, the Cornerstone of Successful Investing. Welcome everyone to the podcast. I am your host, Brandon Oliveris, and I'm here with Christine.
Hi.
And we have our co-host on today. We have JC on again, because last week was so much fun.
Hey everyone.
So I'm excited. We have him on for the whole podcast this time, because I figured out how to get Zoom tied into my recording software, so that's super exciting.
That's a nice upgrade.
Yeah. So this is really cool. We're high tech here.
Yeah, definitely.
You are high tech.
I'm high tech. It's not really that high tech.
No, but it sounds complicated. That's the whole thing, you know.
It does, yeah. It's super complicated. No, just kidding. So yeah, it's I had been avoiding it for a while because it sounded really complicated, and I was trying to, I knew it was a possibility, but it just sounded really complicated. And so
for a programmer to say that something sounds really complicated is pretty bad.
I'm also very lazy.
Yes, that's true.
And so, you have to agree with that,
I do.
Yeah, but as a programmer, you always find a way, to make it work. Like that.
Right.
That's why you're a programmer. Like,
well, they say lazy people are the most efficient. So
that's
they say if you want something done right, get a lazy person.
Hire a lazy person.
Yeah.
That's very true.
So, so I'd been avoiding it for a while, but I finally figured it out. Now we got it working, and I think it's all working together well, so that's good. So, yeah, we're excited about this. So, without further ado, we will get into our first segment, which is the Week in Review. Crazy week this week. I mean, just nuts. Think back to last Friday. Trump was going to the hospital with COVID. Market tanked last Friday, like over 1%, I think. And then Monday, and everything's just back in the green pretty much all week. I mean, I'm looking at the data, the indices here. Like the S&P rose like 3.8% this week. The Dow 3.3%. The NASDAQ 4.2%. The VIX fell almost 10%. That was nuts. Almost every day this week, the VIX fell. And so it's just been a crazy week. And then with stimulus talks, are they off? Are they on? Who knows? Depends on the day. What did you think of this? It was just crazy. Like every day was something different, right?
It was, it's always the same thing. I feel like in April, the market crashed and then it started going back up.
Yeah.
And properly back up. And once again, the market had a bit of a down move. And then after that, it started, picking back up, but properly picking back up.
Right.
And, you just literally have to follow the trend. And it's annoying when, you think that it's going to be a bigger down move than what it is. And because the market is just going up so quickly, if you have any bearish trade, you're hard. Just going to get burned.
You're
just going
crushed,
to get burned.
Yeah. And it doesn't help. And I think, and I don't like to get political, and I'm not going to, but, Trump had his little announcement on Tuesday. Was it Tuesday? Monday or Tuesday? That stimulus talks are off to after the election. Market hated it. And then I can just imagine. Now, I've seen people try to justify why he changed his mind, blah, 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 but, deleted his tweet. But I can just imagine him watching the market. Oh, no. The market's dropping. They hate what I said. Okay. Emergency measures. Okay, well, well, I didn't say we couldn't do smaller bills, you know? And then, and then Pelosi's like, no, we can't do smaller bills. Okay, well, we'll up our offer. Now we'll do 1.8 trillion. How about that? So talks are on again. And he even said yesterday, he's like, go big in his tweet. So it's...
Honestly, each and every single tweet, the market is going to overreact to it.
Oh, yeah.
It's whether going to go up or down. And
yeah.
It's crazy, honestly. It's crazy to see the impact of his tweets on the market. It's
Yeah.
always something, there's always something that is going to happen with his tweets. There's never a tweet that is going to be, like, ignored by the market.
Right, exactly. Yeah. It looked like, I feel better today. Market up 10%. I mean, seriously, I don't know if there was a day that was like, I mean, some of them were less than 1%, but it was big moves almost all week, up and down.
Yeah. Yeah, especially Thursday night to Friday. I mean, we had a big gap up and we continue climbing up. I mean, yeah, it's exhausting, honestly, when you're
really
bearish.
Is. Right. So it's it's nuts. And so, I mean, and I don't know how much attention you paid to the Russell 2000, but that's been, I mean, meteoric. Its rise over the last few weeks. I've been watching the IWM has gone from like in the 140s all the way up to like 162, 163. I don't remember which yesterday. Like,
I'm getting burned. I'm getting burned. Like, it's so funny because I have a call credit spread on IWM after I put it after all the tech stocks basically started going down.
Right.
And, I'm still 45 days to expiration. And honestly, I think that it's going to come back, and I'm not really worried. I'll take the max loss if I have to take it, but it's painful to watch it. It's always painful to see your credit spreads going in the money.
Well, I have a short call at 174 for the IWM, so I'm hoping by November 20th, 174 for the IWM. Yeah, so I'm hoping that...
it has to stop at some point.
It has to. I'm hoping it peters out somewhere. Like, okay, we've gone from like 140s to 160 in like the last 2 weeks or something. So, I mean... Yeah,
but what's interesting when you look at IWM, for example, it's not at the point where it was beginning of February before the COVID crash, compared to, for example, the Nasdaq that went way above where we were in beginning of February, and like for example the SPY, the Russell is not there yet. You know, so maybe it's due to go back to where it was before.
Right, it was trading sideways for a while. It was around in the low 150s for a while. I remember. So that's, it's been kind of picking up from there. And now, like, even the NASDAQ's been kind of trailing behind a little bit. Maybe not this week, but in general, tech hasn't been as big as it was. I just got an email from an analyst yesterday saying that there's been a move to value lately out of growth. So that's an interesting move. I mean, I had stocks this week literally go up 20%. I was in Hibbett Sports, HIBB. It was just something the analyst recommended. Started out the week at $40, and now it's at $55.
Oh wow!
Damn.
The
tech stocks, honestly, they're crazy. It's always crazy with the tech stocks, and it's true that when you look at, for example, Zoom. Like I remember that Zoom had a big bull run. Like it's at 492 right now. Zoom. And it's all due to the working from home and everything. And when you see that it went from beginning of 2020 from like $65 to $492 per share. How rational is that?
I was just going to say, I looked yesterday because someone mentioned Zoom, and I'm like, oh, last I remembered it was like, 280 or something. And I looked, almost 500?
Yeah. But you remember the earnings? It was when it was around 315. That was the day before the earnings, before the big gap up, and it went to 435. I had shorted an iron condo for the earnings at that point.
Sorry.
But that's exactly where iron condos are useful, because if I had a strangle on this, that would have hurt a lot more. And at least, I was almost at max loss, and I just took my loss, and that's why you stay small.
Yeah, exactly. And that'll go well into today's topic. But I was going to, and you kind of mentioned it, but I was going to say, remember when Zoom was like $70?
Yeah. That's crazy, because the tech in itself, the product in itself hasn't changed that much. Changed. And worse than this, there has been, a lot of news around privacy and security issues. which doesn't justify at all what the stock price is doing right now. And it's funny to see that even though there has been some security issues, and I remember that even, I don't know if you saw this, that Boris Johnson was using this with his colleagues, and they had to stop because apparently there were some security issues here. Right. So even with that, the stock is just continuing going up, and it's like 500 now. It's crazy.
It's literally grown like 800% or something crazy. I mean, it's nuts. So looking at some economic data real quick, we had let's see, just service. They had a PMI final service reading of 54.6, which is right on target. So expansion for September. The really interesting thing was initial jobless claims. On Thursday, they reported it was 840,000 versus they were predicting 820,000. Still super high. Initial claims. So that means if I'm understanding correctly, that means every week that many people are filing for unemployment. So, that's people being very bullish on the economy, and that's where for me it's very sobering. It's like every week we have 800,000 people filing for unemployment.
Sad.
And 11 million continuing claims. That's nuts.
That's a lot.
That's a lot.
That's a lot.
That's a lot.
And it doesn't seem like it's going to go better because, I don't know. I know how it is in the US, but for example, in Europe, things are going bad again.
Yes, that's what I've heard.
Are starting to shut down again. Yeah, Madrid, for example, in Spain is being completely shut down right now. They're looking at putting a quarantine and lockdown. Obviously, they don't want to do this because that implies a lot of economic cost behind it. But they're still looking at it, and the cases are rising. So we're not done. We're not done at all.
No, we're not done, and that's scary. And here they're trying to hype it up like, oh, we're going to have a vaccine by the end of the year. I don't know. That seems super fast. I don't know if we will.
Even if we have a vaccine, the fact that we have a vaccine and the fact that everyone is buying vaccine, that has properly the vaccine in their blood and everything, and everyone is safe, there is a big gap between the two. The time that all the vaccines are being delivered and everything to all the countries, it's going to take a while, honestly.
Right. And even if everyone were vaccinated tomorrow, there's still a huge hit to the economy that's not going to be recovered from for, I would say, at least a couple years. This is not something you just bounce back from.
But I don't know. Sorry, I don't know about you. I had the feeling, I don't know why it's stupid, but since, at the end of 2020, everything is over and we start 2021.
Right, I know, right?
Fresh start. and it feels like less and less credible,
Right, yeah.
It feels it's not going to happen at all. Yeah, let's just start, again, like nothing happened, and we're just starting again from a fresh start.
Yeah, I know. It's probably not going to be that way. I know personally, I'm so tired of wearing masks everywhere. It's not too bad going to restaurants because you can take it off of the table, but other places you have to keep it on the whole time.
Like church,
church, go to church on Sunday and the whole hour you have to keep on a mask. That is really tiring.
Yeah, I've seen also people having to wear the mask in the office. That must be really painful because for 7-8 hours straight you have to wear your mask. Yeah,
I'm lucky that I get to work from home, so it's not.
Yeah, same. Yeah.
But it's no matter when the vaccine comes. There's still going to be a huge economic downturn for the foreseeable future. This is not something we can just bounce back from, right? So, I don't know. I think it's going to be interesting to see where the market goes over the next few months.
Yeah.
So, that being said, let's get into our main topic. Let's see. Risk management, the cornerstone of successful investing. So, I thought I was super creative with this title, and then apparently there's already an article out there named almost the same thing. So, there's that.
Leave it to you.
Yeah, but risk management is, and I've discussed it here and there before. It's one of those things you can't really talk about investing without talking about risk management. But I'm sure you'd agree that it's probably one of the biggest things that we have to be aware of.
Yeah, 100%.
When we're investing. I mean, and so many people don't. I mean, so many people take huge risk without really thinking about it.
You know, I think there's a huge misconception also around risk management. A lot of people think that it's, you know, very complicated things that you need to do so as to keep your risk in check and everything. But it really comes down, I think, to very simple things.
Right.
And we are fully in control of our risk.
Yes,
and I think it really comes down to position sizing.
Right.
It's like literally the only thing that can, you know, that you can't come back from. If you make a mistake on the position size, like you trade too big, you won't be able to come back from it. If it's too big and you lose too much, that's the only way you can really fail, like in the end.
Right, exactly. There was a post in your group just recently where someone was talking about how do I get over the fear of losing a lot. I think if you remember that one, and I had responded and said, just if you're afraid of losing a lot, you are risking too much.
For sure.
Right? Yeah.
For sure. Like you're not afraid of losing at the max loss or I don't know, a two or three standard deviation move if you're trading small. You're not afraid of it. Right. You know, I think the one very important thing and one tip that helped me a lot is like when you look at your trade, you need to be like, I really don't mind about having, you know, a 2 standard deviation loss, for example, meaning like a loss that would happen like 2% of the time, 1% of the time, you know, and you need to be able to say, I don't mind about that loss.
Right.
But, you know, that's how you know that you're trading big enough and you can't go over that. And if you go over that and you start being like, I hope it doesn't go that way, well, you know, that's where you know that you trade too big.
Right. Yeah. If you start hoping, there's no room for hope in the market. I think I've said this before. And we all do it, obviously, but just practically speaking, there's no room for hope. If you start hoping, wishing that a stock would go in a different direction, you're probably done for that trade.
No, it's the worst is, you know, the markets, I think, are in a way very cynical because they make you believe that, you know, you're fine 99% of the time. You're fine. Even if you trade too big, you know, 99% of the time you have your profits. You're very happy. But the 1%, when it comes, and it's going to come, sooner or later, this 1% move is going to come and is going to crush you. Oh, yeah. And that's the cynical part of the markets, that they make you believe that it's fine to trade, you know, big and everything. And that's why so many people are trading too big. That's why so many people, you know, we see it all the time, whether it's in the group or in other groups on Facebook or everywhere, like, you know, people posting big gains and everything, but those big gains, on the contrary, they're going to become huge losses because, you know, they're obviously going to experience the other side of the coin at some point.
Yes. Right, exactly. And it's in a bull market, they always say it's easy to make money in a bull market. I don't even know what you'd call this market. But
well, the COVID market.
COVID market.
That's true. That's
I mean,
a good name.
I think it's like insulting to call it a bull market, but I mean, technically it is. But it's like, how could you possibly be a bull market?
Yeah, it is. It is in a way. Like you look at the chart in March, it completely fell. It went to 230 for the SPY, and now it's at 346, and everyone's happy.
50% in 5 months. I mean, that's just. So
that's completely normal.
Yeah, that's totally normal, you know. Especially after a 10-year bull market. I mean, this is totally normal.
Yeah, for sure.
New highs, you know, every day, new highs. But I think it's this year especially, there have been unprecedented moves. Yeah. I mean, you know, we talk about probabilities and statistics, but even a 10% chance of loss, you're still going to get hit. That 10% of the time, you know, even if a move is like only 1% likely, it's still going to happen sometimes, and it will probably happen this year.
No, but that's so true, you know, and that's why like it's so important to understand the probability side of it. And you know, I feel like when you understand the math part, and you know, it's not even that hard. On top of that, it's not hard to understand probabilities. You just have to understand that, you know, if you have 99%. yes, you're going to do good, the 99%, but the 1%, you're going to get crushed. That's just how it is.
Right.
And you just have to face the reality and stop lying, to yourself in a way that it's fine if you trade too big, because it really comes down to, expectations about the market, ego. And there's, it's mostly the person that is putting themselves into bad situations. Like the market is just doing its thing. Like,
right. Yeah, it is. And, and I think just getting to the basics of risk, I mean, the way that investing works in general, the more risk you're willing to take on, the more profit you can potentially make. It's not guaranteed, obviously, or there wouldn't be risk. But there's no, and I see people saying all the time, like, is this a sure thing? It's this is definitely going to happen. If it was definite, you wouldn't be able to make money from it.
Yeah.
I mean, just to get real technical for a second, I'm sorry, this is my Series 65 knowledge coming out.
Yes.
But the only risk-free trade is the discount rate, the risk-free interest rate, literally. And that's like 0.1% right now. So if you want more than a 0.1% return, that's the risk-free interest rate at this point. Because interest rates are just horrible. If you want more than that, you're taking on risk. Risk-free literally means you're not taking on risk at all. Right. So if you want more than 0.1% return, which, I mean, we all do, you're taking on risk. If you want, 1% return, you're taking on a little more risk. If you want 10% return, you're taking on a lot more risk. So, bonds, they have their own risk. Especially now with, interest rates being horrible. Stocks have a lot more risk. I mean, everything has risk. So the question is, how much risk are you willing to take on? And that's an individual consideration you have to decide.
I think... Sorry, Christine.
Go ahead, Christine.
No, I was just going to say, I think it's about balance.
It is, yeah.
It is balance.
It definitely
is.
Sure.
For sure. But I think the problem is, like, when you go into the markets, you need to embrace this uncertainty that we always have in the markets. Every day when the market opens, you don't know what is going to happen, and you need to embrace that uncertainty. And honestly, it's crazy because I think a lot of people and a lot of people who have lost a lot of money and a lot of people who trade now would appreciate trading a lot more if they were just reducing their size. And yes, they would maybe earn less money, but just reducing the size makes it so much easier. Because, and I was listening to an interview of a guy on Tasty Trade last time who was a rising star, and he was like, there are two types of trades. There's like the good trades, we don't need to talk about it, and there is the bad trades. And that's exactly how it is. When you have bad trades, when you trade too big, that's really bad. But he was saying, when you reduce your size, you're only left with good trades, because the bad trades, you can just roll them.
Right. Yeah, and they just kind of, they don't really affect your account too much.
Definitely. And, I think it's so easy. On top of that, I've seen more than before people trying to start options with like $300, for example.
Yeah.
And the only thing that you can actually do when you have a capital like around $300, $500 is like whether you buy options on very cheap stocks or you sell credit spreads. But the problem, credit spreads, I mean, you won't be able to really scale this. And I think if you have an account of like $500, you're really shooting yourself in the foot. And it's going to be, you can be wiped out just because of bad luck, literally of bad luck.
Right.
And you haven't even done anything to deserve this, but just because of bad luck, you can be wiped out.
Exactly.
Because you don't have the capital to be able to handle anything.
And it's hard, when you can't really take on that much risk because of your account size, because sometimes you might want to, and it's okay, sometimes you say, I think this stock's going to go up next week. And it's sort of maybe it'll work, maybe it won't. Some people call it a lottery ticket, Like, I think it might. But if your account's $500, you can't afford to do that, because you could lose 20% of your account, 40%, you could lose a lot of your account just by making that kind of trade. But if you have a larger account, then you can say, you know what, I can put $500 into a just-in-case sort of trade where maybe it'll work, maybe it won't, and I'm not going to be out too much if it doesn't work. So
yeah, exactly. And you know, I've been asked, like, it was this week, and it's funny because I've seen several people asking this, and they were asking what can they do basically with $500, and you know, it's terrible to say that, but I was telling them, honestly, the best you can do for yourself is to save more money. And you know, you put more into your account later, and you wait on the sideline. And you know, obviously it's not the answer that people expect, because people want to be told, like, okay, buy this or sell that, but you know, with $500 it's really not going to work, and you know, they're just going to lose hard-earned dollars, and it's really too bad, but honestly I think that's how it is. And you know, that comes back to really the topic of risk management. It's really about facing reality and being grounded to reality. Like, can you really do a lot of money with $500? No, you can't, you know, and you actually you can't even trade properly with $500. So what is the solution to that? Is to really save more, so you can put more into your account, so you can do more after that.
And even, you know, if you want to put that $500 into, you know, a broad, like, ETF, or, you know, something like, you know, like the SPY itself, or, I mean, something that isn't going to lose too much if it does go down, or, you know, or you can gain a little bit, you can do buy and hold, or you can buy a few individual stocks. I mean, that's not, you know, especially more reliable ones. There's nothing wrong with that. It's just when you're getting into options, you need more leverage, you need more capital to really make anything from it.
Yeah. Even though it is, you know, it's always your leverage product, which I think is putting a lot of people in places where they think that they can afford certain things when they actually can't, you know, and especially with margin accounts. Margin accounts are great when things are going well. The moment there is a down move, they're going to bail out on everyone and increase the capital requirements, and everyone is going to have a margin call and being forced to close their positions. And that's crazy, because you can see that very well with STWorks, for example, because when you open a trade, let's say a credit spread, they're going to, you know, you're going to have this buying power requirement, and if you go into the details of the capital requirements into your account, you see what is actually required by the trade, and they have a threshold that is above this in case if things go bad. So I think that's, you know, super important to understand this type of things, because that really goes into the risk management thing in a way that makes sure that you trade small enough, and I think it really comes down to this in the end.
And I think one of the biggest things is just, sometimes I think people don't really believe in risk. I mean, and I know that sounds ridiculous, but people say, I keep losing money, or, you know, why did this trade not work out, or why, you know, because it's risk.
Well, even you, didn't you? You used to really risk a lot at first.
I did at first, yeah, because I was like, oh, this is so easy, you know.
Yeah, we all did.
Yeah, right. But
well, that's how you. Yeah,
it's, you know, it's how you learn. I mean, they say the market takes its tuition. You know. I mean, I've heard people lose thousands of dollars, tens of thousands of dollars, sometimes in a few minutes.
One of the craziest stories that I've heard is, it was on the, I don't know if you know this YouTuber Graham Stephan.
I haven't.
I don't know. Okay. Anyway, he's a YouTuber and everything, and he has a show, and he's interested in the stock market, and he was having someone. So I don't know if you heard about this, about Robinhood. Apparently there was a glitch with which you could leverage your account a lot more, and you could have positions.
Yeah, I saw about that. Yep. Yeah.
And there was a guy who went on his show and was basically telling him the story that how he used that glitch to oversized positions. But, you know, we're talking from $1,000 account to a $500,000 position all of a sudden, you know. So those are big numbers, and if it goes the wrong way and he owes that money, that's crazy. And I'm saying this because when you say people don't realize this risks, they really don't realize, because you know, what if you could owe money to the broker, and
that's no joke. It's serious business.
Yeah,
I mean,
brokers, if you owe them money, they're gonna come for you.
They're
like,
gonna come for you, yeah.
then, and that was crazy to listen to that story, because the YouTuber, he was asking him, like, what did you think when you were doing this? Why did you do this?
Right.
And the guy was like, I don't know. I just didn't, I didn't see the risk. I didn't understand the risk. And I feel like it's very often the problem is, like, it's very easy to see the upside. It's way harder to face the reality of what can actually happen if it goes bad.
And it's a teensy bit off topic, but I'm going to go there for a second anyway. I think it's an issue with how, and I'm glad trading is easy nowadays. I'm really glad, and I'm glad, we have things like Robinhood, which makes it very easy and very convenient. But the downside of that is it can feel like it's play, like a game.
Yeah.
Well, do you remember that podcast we did about the guy that committed
Yeah,
suicide?
I was going to say that kid who committed suicide because he thought he lost how many hundreds of thousands of dollars when he really had.
It was $700,000.
Yeah. But that's when it really sinks in, like, oh, this is real money. This isn't just numbers on a screen. Like, it used to be, you'd have to call up your broker and say, hey, I want to do this trade, and I want to put down this actual real money, and, and I'm glad it's not like that anymore. I'm glad we can trade on our phones or trade on the computer or whatever, but in another sense, I swear our brains can't process that sometimes. It's like, oh, it's just numbers on a screen. How dangerous could it really be? Well,
we don't realize the thing. We don't realize what we're actually doing.
Yeah, exactly.
It's crazy, because that poor boy in particular, and poor family that they have to cope with that. I mean, I remember last time when I did the interview with this person at the from Atlanta and everything, and she asked me, is it the broker's responsibility and everything? And it's hard because it's 100% the responsibility of the broker on the one hand, but it's also the responsibility of the investor because you can't just like do things without understanding what you're doing, because of course it's going to go bad, and that's so unfortunate that this happened for this guy, because that shouldn't happen. That shouldn't really happen, and that should never happen again. But the problem is, it's not only the broker's fault. Like, there is also the individual that is in the equation, and we can't deny that.
Right. I mean, it's sort of like playing with a loaded gun. I mean, and then you have the chance of blowing off a foot, but it's not the gun's fault. I mean,
exactly.
You have to know what you're doing. You're dealing with a dangerous weapon.
Exactly. And the problem is, like, I think, especially with Robinhood, there is I don't use Robinhood, and apparently I feel there is a gamification process in a way that when you buy a stock, you have this reward that, like, I don't know how it is exactly done. I think there is some fireworks or something,
like confetti and stuff shows up on the screen,
and the whole gamification is, it takes you out of reality, and you don't realize anymore. And that's the thing. I think what you were saying, like, when you were calling your broker and everything, you have this sense of reality. You're much more grounded because you have to actually call someone, you have to speak to someone, compared to now, where the fact of clicking a button doesn't feel like it's real money that you are actually playing with.
Right, exactly. Yeah, and that's and I think brokers have, I mean, like you said, some responsibility to kind of make sure we have the knowledge, but at the end of the day, like I said, a loaded gun is a loaded gun, and there's only so much you can do, and that's just how it is. So, I mean, we have to, risk is a real thing. Nothing is guaranteed. And I can't emphasize that enough. If it were guaranteed, you wouldn't be getting a large return. People wouldn't be willing to pay you for it. People don't pay for nothing. They're, unless if the return you want is higher than the risk-free rate, basically you're risking something, and you could lose, and you will lose sometimes. It's just how it works.
One of the very, very important rules that I've learned in terms of risk management is to always try to understand why in what case could I be wrong in that particular thing. If I take that trade, why could I be wrong in a way that, you're sure that the stock is going to go at 100%?
Right.
Why could you be wrong? And what would happen if you were wrong?
Right.
I think that's the only rule that will push people to always try to learn further and everything, and to always try to understand size. Because if you really respect that rule, always honestly, asking yourself what can go wrong and what would happen if I was going wrong, you are going to progress. And at some point, you're going to understand the position size and everything. But, it's just about not sticking to your first assumption, like, yeah, I'm going to make a ton of money. No, don't stop there. Ask, what if it goes the wrong way, and that's personally helped me a lot when I was learning how to trade. It's like, selling naked options, what could go wrong? And it's very important to understand this type of things. A lot could go wrong, actually.
A ton could go wrong.
Yeah. But when you understand that, then you can adjust your position size around it. So even if things go wrong after that, it's not that big of a loss. Right. And that, for me, that's the key. That's the key of risk management, is trying to understand what could go wrong.
And I think, that's a really good point. I like that. And a related point would be, okay, so if I win this trade, let's say it's a credit spread. Okay, if I win this trade, maybe I'll get $100, and if I lose this trade, maybe I'll lose $200. So, is this worth losing $200? Because I could lose $200. And like I said, sometimes we have to make that real to ourselves. I remember one time I put on a trade, and I made the wings of the spread too wide, and I thought, oh, there's no way it's going to lose all that. Well, you can guess what happened. It lost. And I'm like, it always does. Darn. Okay. So are you willing to lose the max loss? Or, or at least if you're not, then have an idea of where you're going to cut it short, if so. But really stick to that. But are you willing to lose the max loss, whatever that is? Because if 100%. You're not, you shouldn't do it.
100%. And I think, how you basically, how scientists validate a hypothesis is like, they're not trying to prove that they're right. They're trying to understand where are they wrong. And if basically your peers and yourself can't find anything wrong about your hypothesis and everything, that's how it becomes a conviction. And I think that's exactly how we need to think about trading, is like really trying to understand, buying options and everything. Why am I wrong in a way that why buying options doesn't work? And, that's this quest of always trying to find what could go wrong that is going to lead you eventually in the right direction. Like, you're going to end up in the right direction if you always try to be grounded and be real to yourself.
Yeah. Yeah, exactly.
Scientific method for investing.
But it's, honestly, like it's crazy because I learned a lot. Like, I've had a scientific background, like, in what I've done and everything. And I think that's the key, because it's more about the process and how to try to find things and how to validate hypotheses. Yeah. It's really that process that is really useful, and you can really copy it everywhere. And like trading is not an exception. And honestly, that's the key for me. Like, I cannot emphasize enough when I see people like trading too big. I'm like, no, don't do this. Please don't do it. Like, it's painful even for me right now.
It makes me think of, and I don't remember the quote or who it was from, but you ever hear that story about the guy in 1929 who received stock advice from the guy shining his shoes, and he said, the moment someone shining my shoes gives me stock tips, I'm out of the market. Yeah. And it just made me think of that, because like so many people think that this is an easy thing, anyone can do it, and you see everywhere like, oh, what's the next big stock? Everyone's doing it. I went to our favorite Italian restaurant this a couple months ago.
Oh my God.
And we're really good friends with the owner, and he walked up to me. He's like, buy Zoom. And of course, I mean, okay, he ended up being right, but it's great. It's in the public awareness. But at the same time, you don't want people thinking it's too easy. You know what I mean? Yeah. Like this is not a game. Like I said, this is not play money we're dealing with. This is real money. And you have to do, your due diligence, and that's a real thing. People's like, oh, obviously do your due diligence, your DD they call it, but really seriously,
I now saw that it was like DD. I didn't know that there was literally like two letters to mean like your due diligence. Like it really became a thing that everyone says.
They just say it as sort of like a cop out. Like, obviously do your DD, but I would buy this. Like, okay, well, actually do your due diligence.
It's like you have to say it as a formula.
Right.
Yeah, literally. So you justify yourself for what you're doing.
Yep.
It's like those ads that say, you could gain 500% by doing this. And they say, past performance is not a guarantee of future results.
So true. So true. That's honestly,
it's super fine print.
Oh my God.
Yeah.
But nobody listens to that.
But no one listens to that, It's like those, okay, you're in Europe, so you may not know this, but in the US we have these drug commercials and all these different medicines, and they'll talk about all the benefits of the medicine, and then for like 30 seconds they'll in rapid fire speech name all the side effects. Seriously, and it's like I've heard people from Europe who come to the US and they're like, that is the weirdest thing. You have these drug commercials, but no one listens.
We
about
don't
the
have
side
this.
Effects. Yeah, I know.
You don't have them?
No, they don't.
No.
Like,
I think that wouldn't, that wouldn't be quite received well. Like
No,
people would actually go in the street.
Yeah, no.
Honestly, that's no, we don't have this.
No.
Like that's not something that is being advertised or anything. I mean, I think there would be a very big ethnic problem, ethnic problem in advertising drugs and everything on TV. Or no, that doesn't. It's like when you think that before cigarettes were being advertised on TV. I mean, isn't it crazy to think that there were ads for cigarettes? Like in terms of risk management, that was bad. Like, that was.
But that's what it reminds me of, because people don't. I mean, you get the hyped up vision of what could go right, and then you don't listen to the warnings. It's like, oh yeah, okay, yeah, I could lose everything, blah blah blah, whatever. Okay, where do I sign? Where do I get into this? How do I buy the stock? And that's the problem. That's what I mean about taking it seriously. Like, no, you could lose whatever amount depending on your option strategy and whatnot, but you could lose everything. So that's not for fun. That's not just fine print. It's a real thing. You could lose it all. You have to be very aware of that, and if you're okay with that, then make the trade. Because so many people get into this, they open up a Robinhood account and put in make a transfer, and a day or two later they're trading, and it's like and then they get into these Facebook groups with all these what's the next big stock and blah blah blah. And some of them make it big, and some of them they're posting angry messages like, "Why did someone recommend this stock that dropped by 50% the next day?" Like, well, because you're trading in penny stocks. That's what happens sometimes.
Yeah, honestly, for the defense, and I was in that, I was in the same bag. Like I was exactly like everyone else. Where that it's true that it's very weird when you hear for example, you listen to Tom Stubbs now for anyone from the Testy Trade community, and they were like, I've made 25% this year. Let's say 25%. Right. And you're like, when you trade too big and everything, and it's easy to make a lot of money at first, in a way, like if you can be absolutely lucky and start making 1% of your account per day, let's say for 10 days, it's possible. It's definitely possible. And, I remember that at first that was something that was very, very weird for me, because I was like, I'm able to make that 1% per day, whatever it is, and how comes they can't? And I think there is a problem, first of all, of capital size, where that my capital size at the time was like nowhere near. I couldn't even imagine. I think that people for example, Thompson's now have had so much money or anything, I think there's relations of capital size, and it's just that it's not sustainable on the long term. And, the fact that it works for 1-2 months doesn't mean that it's going to work for ever, simply put.
Right. And it could go up 1% a day for 10 days, and then you could lose 6% the next day.
Yeah.
Right.
Yeah.
I mean, that's
especially if you make 1% a day, it means that you're trading too big. You can't make 1% per day if you're not putting a lot on the table. Exactly. If you're not taking a lot of risk. And that's the relationship that people need to understand. Like, as you said, Christine, before, it's a matter of balance. And it's really about the reward and the probabilities.
Yeah. It is. So and I think that's a really good point. And that's good to end on, where you said, if you're making 1% a day, because some people take that as a point of pride. I'm making 1% a day. And all these professional investors are making, 20% a year. I must be some amazing investor, better than Buffett. And it's like, so I like what you said. If you're making 1% a day, you're trading too risky. You're putting in too much of the time. You're taking on too much risk. It's not a point of pride. It's beginner's luck that will run out at some point.
It's your stupidity.
It's going to run out.
But honestly, it's great, if people make money and everything. If they manage to make 1% every day, that's amazing. Right. I'm just very doubtful, and I don't think it will last very long. No. And that's the problem. It's like, you're very cocky at first, and I was very cocky. I was so stupid before. That was crazy. And then, at least the market is very good at humbling you. It just makes you It just teaches you how to be humble. And okay, when you lose a lot of money at once, you're like, okay, cool. Now I understood my lesson. And yeah, that's how you live and you learn.
Like I said, the market takes its tuition.
Yeah,
it really does.
So true.
It does. I've heard that.
It's an expensive one, though. Huh?
It's
honestly,
expensive tuition. Yeah, but it takes its tuition. Like, yeah, yeah. I've heard some horror stories. I've luckily never lost that much at one time.
What's the most that you've learned? That you lost? Sorry, that you've lost like at once in one trade.
Probably, Christine's gonna kill me. Probably 2,000.
Whoa!
Damn. Sorry, I completely.
No, I don't care. No, I knew it was a lot. He just wouldn't tell me.
No, it was a bad Tesla trade.
But it could be worse.
Yeah.
It was a bad
Tesla
trade.
Honestly, Tesla is a wild.
Tesla should
stuff.
have a neon sign saying "Do not touch unless you have like 50 years investing experience."
True, very true. No,
That's
honestly,
right,
there should be.
awesome.
There should be stocks. You know those option levels, meaning that
Yes,
level
right.
1, level 2. There should be a level 4 just for Tesla and
Just for
stuff
Tesla,
like this.
yeah,
you know?
just for Tesla, yeah, and some of those ones, yeah. Tesla should come with a warning: do not touch, unless you are willing to lose everything, because you probably
Exactly.
will. I mean, you're either
Like
going
penny stocks, like everything.
yeah, you're either going to become a millionaire or become bankrupt.
Yeah.
Yeah, but I was reading someone who was saying that penny stocks, yes, they're risky, but there's huge potential. But honestly, the risk is not even worth it. I mean, I'm pretty sure the expected value at the end is negative. I'm pretty sure that no one can actually make money with penny stocks. I mean, I don't see where is the positive expected value in this.
They're
I
too
really don't get it.
unpredictable. I mean, there's a reason they're a penny stock. I mean,
yeah.
Remember, when we're investing in when we're investing in stocks, we're investing in real companies. And do you think a really good company is going to have a stock for $1? I mean, it can happen, maybe, but
Yeah,
there's a reason
why?
it's so cheap.
Yeah, why bothering?
Right.
Trading penny stocks and risking so much. And yes, there's a lot of potential, but you're always risking so much when you could just trade options and just sell options, sell credit spreads. If that's something that if you want a different risk trade, and just that's so much easier.
Yep, exactly. So that's an awesome discussion. This was so much fun. We really have to make this a regular thing. I hope you come on a lot, because this is a lot of fun.
Yeah, I really appreciate it.
Awesome. So yeah, I will have the show notes, possiblepromise.com/17. If you want to see the show notes, I will have this recording and have a list of the topics we discussed. And so as of right now, we're still kind of figuring out the schedule, but right now we're kind of weekly. I like this format because it's like we review the week and then discuss the topic.
I think once a week's enough.
It works. This worked really well. So, but yeah, thanks for joining us. This was a lot of fun. Jason,
thanks for having me.
Yeah, this was really cool. So, with that, we will be back next week for another episode of the Possible Promise podcast. Thanks for joining us, everyone. Bye.
Bye, everyone.
Bye.